Thanks for joining us here at xam.com. I'm Christina Marujos, and joining me today is lead investment analyst Rafi Boyadjian, and we'll be having a look at the upcoming week. Now, Rafi, this week holds two central bank meetings as well as key economic data. Therefore, it looks like it might be a very interesting week for the FX market. So let's start with the euro. The European Central Bank meets on Thursday, and it has been signaled that policymakers would use the June 10th meeting to reassess the PEP program. Are we likely to see any changes being announced to the pace of bond purchases? And if so, how could the euro be affected?
So, Christina, it is a little bit difficult to tell right now because we did initially get some signals that we could see perhaps some tapering in June because, of course, back in March, the ECB had decided to front load their asset purchases. And so June would have been a good time to announce those front loading to be reversed. But lately, we've had some very dovish remarks from ECB policymakers. They appear to have backtracked on suggestions that we could see a slower pace of purchases being decided as early as the June meeting. And one reason for this is because we've seen Eurozone government bond yields rise quite substantially in the past couple of months, and this has also pushed the euro higher. Now, this is partly down to speculation about potential tapering, but it's also simply down to the fact that economic outlook for the Eurozone has improved quite drastically because investors had become overly pessimistic about the euro area. Of course, back in winter, we had those lockdowns, we had slow vaccine rollout. Now all of that has changed. Eurozone countries are coming out of lockdown. We're seeing faster vaccinations. So that has also contributed to this rise in yields and the euro. But the question is, even if the ECB was to not to announce any changes to the pace of their bond purchases for the time being, would we still get perhaps some hints of tapering being just around the corner? And also, President Lagarde will have quite a difficult task on her hands in trying to stay dovish, while at the same time we see the ECB's growth forecasts likely being revised higher. So the ECB will try to avoid taper talk for the time being, but it's only a matter of time before speculation builds up again, because there's this big question of what's going to happen to the PEP program once it expires in March 2022. Will they extend it? Will they increase their APP program to counter some of that? So still, it's quite a few question marks coming up for the ECB in the coming months.
I see. Now let's stay on the central bank arena, because the Bank of Canada also meets this week. Some markets are not anticipating any change in policy. The Loonie, however, has been propped up by the surge in oil prices this week, just as the dollar has started to firm. Therefore, can a dovish Bank of Canada offer further support?
Well, it was only in the last meeting that we had that tapering decision. So, as you said, we're not expecting any changes. But it's not just too soon for more action from the Bank of Canada, but it's also too soon to get any clues about the next taper move. Now, further tapering is unlikely before the autumn. So maybe in the next meeting or two, we might get some clues on a more precise timeline of that next further reduction in the bond purchases will be announced. However, if we do get a statement that is fairly upbeat about the Canadian economy, and perhaps even more upbeat than the last meeting, that should be enough to sustain the Loonie's bullish posture in the short term. At least, as you said, we're seeing slightly firmer dollar, so that could make things difficult for the Loonie. But overall, the near-term outlook for the Loonie is fairly positive.
Now, crossing into the U.S., CPI numbers are expected on Thursday. The sentiment is that inflation has surged in May, but policymakers have been hinting lately that it might be time to start to thinking about tapering. Therefore, could this report be the tipping point? And what would that mean for the dollar?
Well, we had a big reaction last time, only for that surge in yields to quickly die down. So last time we saw CPI hit 4.2%. Now we could potentially see a further rise above 4%, perhaps 4.5% or higher. But it's difficult to assess at this point whether or not we'll get anything more than a knee-jerk reaction. So we've had some hints, as you said, from the Fed that they might begin tapering. But the reason why markets aren't overreacting is maybe because they think that the Fed will only taper very gradually. But the very recent data has been very positive. We've had actually more beats than misses in the most recent data. And that's probably the reason why we're seeing the dollar steady lately and maybe even starting to reverse higher. And so strong CPI numbers next week could add to the dollar's positive momentum. But whether or not this will be a long-term, much more long-term trend or a short-term trend, that remains to be seen.
And finally, let's turn to the United Kingdom. GDP numbers for April, amongst others, are out on Friday. The report covers a time when we had the first steps of the reopening of the economy. Therefore, expectations are for a solid report. The 142 level has been a strong resistance for sterling. Do you think it could break this barrier this coming week?
Well, that is difficult to tell. So we should definitely see a very strong GDP print for April for the UK, because that's when non-essential retailers reopen their doors, and industrial production should also be quite strong as well. We still have that ongoing global manufacturing boom, but most of this is already priced in. And while stronger than expected numbers could lift sterling, we do have, of course, a slightly firmer dollar, plus some concerns about the fast spread of that Indian variant in many parts of the UK, which could push back the timeline of the next phase of the reopening in the UK. So that could also be weighing on sterling. So it is difficult to tell whether or not a strong GDP print next week would be enough to push cable about 142. Probably it won't be possible just yet.
Rafi, it was great having you with me today. This was the weekly Outlook. Thanks for joining us here at xm.com.